It's important to look at futures investing in a whole new way. It is not as scary as many people say it is, but there are risks involved. Now we'll go and discuss the new single stock futures. Up until present, single stock futures have always been illegal. This started back when stock index futures were initiated in 1982. The Shad-Johnson Accord actually set the tone for the 20-year hiatus and illegality of single stock futures. In the Shad-Johnson Accord, it separated what stock indexes could be traded, and it also separated what stock options could be traded. And then it also said who governed what area. Because at the time, the CFTC was a government body, and the SEC were a government body. And as usual, egos and the way things are done force people to bump heads. And so CFTC, the Commodity Futures Trading Commission, took over the trading of stock indices, and the SEC took over stock options. And that's why there's a whole entire different stock option board, which has nothing to do with futures, even though now single stock futures are available. And futures and options are completely different. We'll discuss that later. So now, fast forward to the year 2000, and President Clinton puts in a bill called the Commodity Futures Modernization Act. And one of the things that the Commodity Futures Modernization Act, CFMA, did was allow for joint regulation of single stock futures, thereby taking them out of the limbo of illegality. Now, it's interesting to note that when this act was passed, the stock market was in its heyday. It was actually at the top of the dot-com and NASDAQ bubbles. And part of the reason why this was passed so quickly was to relieve some of the tension from the bubble and kind of push a lot of the speculators over into futures and allow them to trade in these new style futures contracts. Unfortunately, because it was held up for 2 years, the SEC had to go through rules, the CFTC had to go through various rules, and they had to figure out how these things overlapped. By the time single stock futures were available, not only had the market begun to deflate, it had crashed, and the dot-com era was over. So the reason why the CFMA was created no longer became the same, and so single stock futures didn't receive a great reception when they came on the scene. Right now, the single stock futures are doing well. A lot of developing countries use them. Part of the reason why the CFMA was brought in was because Europe had started the universal stock futures, and they were doing well with them. Companies like Ericsson were traded, and people were profiting, and speculators enjoyed them. Now, the average investor is forced to look at futures as an investment. While they'd always looked at stocks and bonds as their cornerstone for their investment portfolio, now with single stock futures, the dynamics of how they invest are being changed. And it's important for average investors to understand how futures works and how these new single stock futures will affect their overall portfolio. The exchanges that trade single stock futures, there are two of them. The first one was the NASDAQ Life website, www.nqlx.com. They trade in both the European universal stock futures as well as the current stock futures. Currently, they're going through a lot of problems. With NASDAQ leaving the Life in this joint partnership, many of the trading market makers and traders that existed are slowly slipping away from this particular exchange. Hopefully, they'll still be around. It's good to have more than one exchange trading in these contracts for arbitrage opportunities. But right now, the future is fairly uncertain on how well they'll do. Then there's One Chicago. This is a very unique conglomeration by all of the Chicago firms. The Chicago Board of Options Exchange, the Chicago Board of Trade, and the Chicago Mercantile Exchange all got together and developed One Chicago, because each of them had interest in the new single stock futures. The Chicago Board of Options Exchange, because they trade stock options solely, wanted to participate, because this was finally the instrument they were looking for to increase their liquidity and increase their volume. The Chicago Mercantile Exchange and the Chicago Board of Trade were now given the opportunity to be on par with the New York Stock Exchange and NASDAQ by participating in single stock futures. Many people like to call single stock futures the second stock market, and in many ways it is. The One Chicago tends to be more popular, and they're doing quite well right now with liquidity. Now, what is traded in single stock futures? A sample of some of the stocks that are being traded now are American Express, eBay, Amazon.com, Time Warner, AOL Time Warner. You're looking at Microsoft, Oracle. Many of the major contracts which are actually part of the Dow Jones 30 component are actually being traded as single stock futures, as well as 70 other contracts which influence the market. All of the contracts that are being traded now in single stock futures actually are also part of the S&P 500. So each one is relevant to today's portfolio. Now, with single stock futures, they've added an extra component. The Dow Jones has created what are known as microsectors. And in these microsectors, they take companies which are movers and shakers in a particular industry, anywhere from 4 to 6, and lump them together to give you an idea of what that particular sector is doing. And there are many sectors that are being traded now. The airline sector is one microsector that's being traded as a single stock future contract. You have banks, the biotech industry, semiconductors, defense, the drug industry, gold. The investment banking industry has a microsector component. Computer networking companies have a microsector component, as well as oil services, pharmacy, retail businesses, semiconductors, and the software businesses. So when you look at the futures, the narrow-based indices, you can easily see that you have an opportunity to remove yourself from actually picking individual stocks and trading them in a speculative format, and shift a little bit of how you trade into the single stock futures and make them relevant. So for instance, if you have a huge portfolio of stocks that you trade, whether they follow the S&P 500 or the Dow Jones, but you have a hunch or a feeling that the banking industry or the airline industry is going to go either counterintuitive to the S&P 500, or you're trying to gain a little bit of extra profits from a jump up in those markets, you can go ahead and invest in these markets in the single stock futures arena. Very exciting, brand new opportunity. Now, we've talked about speculators, the large speculators and the small speculators. So the question is, how can you become a speculator? Well, it takes two things. Number one, you have to understand the demons of fear and greed. And secondly, you have to understand how these particular demons manifest in your day-to-day trading. The demons of fear and greed will easily derail you from either starting to trade futures or actually getting you into futures for the wrong reasons and clouding your judgment. So by knowing how these demons show up in your personal trading, whether you've traded in stocks before or are consulted on how to trade futures, you should be able to defeat them and have a rewarding trading experience, whether you win or whether you lose. Very important. Now, as a speculator, we can go into the top 10 mistakes that investors make with futures. And each one of these mistakes is very important for you to understand and take with your futures trading experience. Futures trading is not to be taken lightly and by no stretch of the imagination, and there's certain rules that come up and need to be applied in your futures trading to make you have a rewarding experience. And hopefully, by going through what can possibly go wrong, you're able to figure out how to do things right.